Welcome to the Farms.com Risk Management Daily Video Commodity Market Bottom Line for it's Friday, October 9, 2015. It's USDA report day. My name is Mike. You know, Chief Commodity Strategist, and not the report we were looking for. But before we get to that, we're getting a technical in-house buy signal on the Canadian dollar. So that's a bottom call, change in trend for higher prices as of yesterday, October 8th. But just got to put a little bit warning in here. It's largely because of higher crude, lower US dollar. After testing a 10-year low last week at 74.28, we're up about 4 or 5%, and it's hitting resistance in the 77, 77 and a half. There's also resistance at 80. We've got elections around the corner. Employment numbers came out this morning. We're a little bit better than the market was expecting, so it's up on that. History doesn't show that elections tend to do much or have much effect on currencies, but something to watch if we do get a surprise. But when you look at, so crude oil is a dead cat bounce, still oversupplied, still got to think that prices go lower before they go higher, but the market is thinking that U.S. shale production will come down eventually in 2016 because of those lower prices in the last 2 years. U.S. dollar chart, you can see, is also coming down a little bit because as of a week or so ago, the U.S. employment numbers were disappointing, so they've kicked the can down the road, probably to April 2016 for higher interest rates. So the U.S. dollar probably going to retest the lows in September and August, but I'm not sure we're going much lower than that. It's just marking time, so should head higher eventually. If you put all the charts together, you can actually see that there's a lot of correlation between crude, U.S. dollar, and Canadian dollar. So where you think the U.S. dollar and crude are going, more or less, versus elections, I think crude and U.S. dollar have more of an impact. But we don't think the Canadian dollar is going to run away on us here short term. But if producers are behind on sales, the Canadian producers, you may want to look to do more basis contract risk futures. That's your best practice today. Again, I don't think the Canadian dollar is going to run away at you, but you know, if we do move up to 80 cents, that could be a negative for basis. Now let's get back to the October WASDE report. Numbers overall okay. You know, so if you look at the numbers compared to expectations, it was slightly bearish versus last month, neutral to slightly bullish. At the end of the day, will this report really make a huge difference going forward on price? I don't think so. It's not going to move the needle enough. I don't think it allows corn to move above $4. I don't think we can get bean prices to move above $9, unfortunately. If you look at the corn yield map that the USDA has put together, the numbers are all over the map. I mean, one good word to describe 2015 is variable, and you know, they're flip-flopping. They're going from higher to lower to higher. You know, there's some objective yield data in this report, and the early stuff looks like it's better than expected. We've been hearing that the beans in the West, best ever from elevators, coffee shops, even better than last year. The East, obviously lower, but you know, the East is still lower versus the West. A prime example is there's some elevators in the East in Indiana offering 50 over for corn. So guys need to take advantage of that. If you look at the bean, soybean map again for yields, all over the map. I mean, last month they increased the bean yield in the eastern belt, and now they're slightly lower this month. Again, some variability there. Maybe the rain did make rain. The question will be is when we get to the November report, and so this report essentially buys us time. Will those yields start to drop as the later planted stuff starts to disappoint? If you look at the corn yield objective implied ear weight, you can see that USDA increased the implied ear weight for corn above the September. And so that's probably why you had that increase in yield from 167.5 to 168. On the soybean side, you can see from the chart that the implied pod weight actually fell from the record high from last month. So that's probably why you didn't get that big surprise where, you know, soybean yield came in at 48. So what do? What's the post-game plan? Our price targets haven't changed. It just delays our Christmas rally a little bit. We're just going to have to wait till the November report for more information. Again, the markets remain range-bound. Both the top and bottom side really are capped at this point. If you're a livestock producer, again, look in the book feed for any corrections here. If you're a grain producer, again, look for positive basis contracts to do more of that as your best practice, and risk futures into 2016. Other news, I think the wheat market will go back to focusing on the dry weather in both Russia, Ukraine. Australia is still a question mark. USDA actually revised Australia up. Meanwhile, all the private analysts are going down, so that will be a big question mark for the markets. And soybean production actually did come down lower than expected. So that's probably why beans are bouncing a little bit, but I think the cap is around $9. Ukraine announcing government that the wheat crop for 16 is in trouble. It could fall by as much as 30% because of dry weather. Other than that, not much else going on in other news. Until next time, thanks for watching. Have a great weekend.